Welcome, ladies and gentlemen, dear traders around the globe. We would like to say welcome to our real-time daily trading idea webinar. So in this webinar, we have 5 days with 5 different traders, and 5 different trading styles. And today is Friday. So today we have the pleasure here with Dirk. In a couple of moments, he show us some interesting trading setups, discuss the topics of the day, what's going on the markets, and for sure answering here your questions. But first of all, here's our risk disclaimer. So please be aware that Forex and Indices are leveraged products and can result in losses that exceed your deposit. So they maybe not be subtitled for everyone, and please be aware that all we are showing and presenting here today, it's just a personal opinion of our traders and not an advice for investing. So here are some additional information. The ESMA regulations just started at the beginning of August. So we have here a maximum leverage of only 1 to 30 at the moment for retail clients. And here you can see some of your options. For example, here maybe you are able to entering to professional client. So for additional information, please check our website. There you find more about this. Yeah, here are some pictures from our traders. So today is Friday. So on the right side we see a picture from Dirk. Yeah, as I said at the beginning, in a couple of minutes, more about Dirk. Dirk and me do this webinar in a co-moderation. My name is Tim Tam, and I'm a sales guy from Germany. So yeah, the pleasure is on my side. So here additional quick overview of some of our offerings. For example, here our DAX, our bestseller. We offer it with a typical fixed spread of only 0.8 points during the main trading hours. These and other products you can also trade in mini contracts. Here on the right side you see some of our awards for our customer services and our products. If you have additional question, feel free to contact us. Here you can see our contact data. Also you find it on our website. Yeah, and additional information, this is a live trading webinar. This webinar is recorded, so later you can find it on our YouTube channel. So that's it for me for the moment. Good morning to you, Dirk. Again, hope you're doing well. You have the screen and you can start.
Yes, good morning, Tim. Okay, let's just start. Let's just kickstart into the Friday session. A couple of trades have been made already. If you have a look at a couple of things like, that one, it's a German platform. It's called Guidance. You will see that they always have been launched a EURUSD trade this morning, and half of it is taken profit already. If you have a look at that, just check that out via FX Guidance, and you will find, and on top of that, you will find the Admiral Markets webinars from the Friday session. If they are loaded up to YouTube, I will post them there as well. Then you find the link quite easily. Okay, let's have a look at the market this morning, and I'm especially just opened three symbols here at the Market Watch, just to be clear that there are 3 major markets to be observed today. First of all, major 1 is, of course, Euro-US dollar. Major 2 is the German DAX, and major 3 is the Nasdaq 100. The last one, Nasdaq 100, will be quite interesting to watch coming into direction to the US opening today. If we have a look at the happenings or the stories around the last, let's say 24 hours, besides that, there is still another session of a trade war conflict going on between US and China. You gotta see more trouble in trade conflicts or trade negotiations between Japan and US. Some trade conflict stuff between US and Russia, and a couple of Asian markets coming under pressure this morning. As all these kind of trade uncertainty unwinds and coming up again. So if you take out the Asian markets this morning, you will see a Nikkei 225 very much down the road, 1.33% it closed. And a couple of stories like we will talk about later about Tesla, for example, which is a very interesting stuff the last days. not because not only because Musk is talking about taking it private, but because it has a huge gap to be possibly closed to the downside. So we will see, and we will have a look at the chart later on. Okay, this morning's DAX went down, as you can see, a little bit down the road, heading around 12,470s right now, and already made a low at 12,450s. Let's check out if we can just widen that picture here. And I'm still using that old chart from last Friday. As you can see, a couple of those Fibonacci retracements are still valid. And as you can see, there is still a 12,402 marker here, the 61.8% retracement, which is maybe to be caught today or on Monday. Let's see how that works out, and it turns out to be. So if we have a look at just a couple of stocks from the German DAX, which are beaten down the road quite heavily today, you will have a look at single stocks like the Deutsche Bank share as well, which is hovering around 10.36, 10.35 right now, and been down approximately 3%. If you can trade that via the MT5, you will see stocks like Infineon Technologies, like IFX, the symbol, or you will find stocks like ThyssenKrupp, which is beaten down the road because just of stories and a risk story. This is maybe one of the most interesting companies right now from the German DAX, ThyssenKrupp, because of those management issues and board issues, because the management really left the boat, and the CFO has taken over. And let's see how hedge funds and politics are trying to play out that stuff. Okay. First checking out the DAX session. So we might be closing all this kind of stuff here just to have a naked chart and start with analyzing that stuff again. First of all, you see the green moving average 100 here, a simple moving average, which is hovering around this 12,595. So the Admiral pivots right here, you see the support 3 has already been tested. So that's the support 3. Support 3 is 12,472.52, and the current low, as you can see, is 12,458. So we just might try to catch a knife here, but first of all, we will try to find some better entry points, or let's say some more important supports to the downside, where we might have a relong scenario. As you can see, that one here, I'm doing that stuff here for you guys again, and that's the 61.8 level, which is the most interesting support zone here, where you might go long between the 61.8 and the 50. So that's very close to that one. You might have another let's say another dump down road to the direction to 12,450s again. That might be a nice invitation to try the first relong scenario. If you have a look at the shorter time frame, deleting that one here, leaving the 61.8 retracement horizontal line here at that place, and going to the 1 hour chart and checking out the latest levels of this kind of retracement level from the low to the last high here. Let's just check out if that is correct. That's the 12,690s, and that's the 12,688s. Yeah, so that's correct. And looking to the downside, where possibly another retracement is heading to 61.8 on the hourly chart. I'm just deleting this one here as well, not giving too much information about that, and checking out a couple of indicators like the RSI, Relative Strength Index, which is of course on the hourly chart already massively oversold around the 20 markers. Checking that out at a 4 hour chart here, and as you can see on a daily, nothing like oversold territories yet on the daily and 4 hour, only 1 hour. So of course you can trade time frames, definitely time frames. If you look at some kind of guys who are selling signals or whatever, you always have to ask yourself what kind of a time frame it is, what they are really trading. You can be long in a longer time frame like the daily or the weekly and scratch your head what is going on with this guy selling the signal to buy. But you can be short on the time frame, like a 1 hour or a 30-minute time frame, and because on this kind of a time frame, the market is massively oversold, and try to massively oversold, and that's the reason you might be going long again. That's the reason. So you always have to ask yourself what kind of time frame you might trade. First of all, we will start trying to catch this market here with a pending order. Doing that, of course, if you like that one, going into the navigator and going to, for example, the mini terminal. Where is it? I guess there you go. And if you don't find that stuff, you will ask Tim and his guys from the help desk, of course, and from the sales desk to implement that kind of software into your MT4 as you like that one. On top of that, you will find the mini terminal stuff like the order ladders, and of course the blue one is the buy and the red one is the sell zone, as you can see that from the colors. And of course, you are still able to do that old school if you have a look at the market watch. If you have the DAX, for example, and if you are just a double-click stuff, doing that with market execution pending orders and stuff like that, like buy, sell limit and stuff. So we would place a buy limit at, just doing that because it's more quick right now, 12,460, and placing a stop loss at 12,435. And going to have the take profit zone. If you just have a look at the first support zones, support 2 like this and support 1, you will be you will be trying to get this long scenario at the minimum to the middle of S2 and S1. So that might be something like 12,560s. Okay. And of course, don't forget to hit the button. It's just placing. It's a buy limit. And that's how it is set. Especially right now, you can see you could do the same with the order ladder here, and just by moving and dragging up and down, and just pressing the button in this kind of red and blue and red zones. And you just see that right here. You see the buy limit, you see the stop loss limit, everything is written on that. You see the risk. The risk is just 25 euros in that case, because 25 points, of course. And if you see that, you see the take profit level here as well. If you don't like the setup in the next 10, 15 or whatever minutes and 1 hour, you just press the right mouse button and could delete it, like you see it right here. If you just take your mouse button, your mouse into the lines, you can even easily modify, delete, whatever you want to do. All right. Thinking about the way where the German DAX is heading to in the longer term view, if that kind of trade conflict stuff, of course, it turns out to be more aggressively and more severe, you will be seeing the DAX going sub the 12,400 marker into the direction of the old low. What kind of an old low I'm talking about? Simply, you see that one quite easily. Let's see. Just get a little bit more space here. Just closing that one here. Yeah, okay, so I just minimize it. So you will see the low is around. Come on. The low is around the 11,700 and 598. So 11,700s, which could be the next longer term target if you just break the old zone between those 12,040s, 12,030s here. So that might be the way to the downside. I spoke a couple of months ago, let's say in the beginning of the year, I already spoke about that the German DAX already made its record high, and I don't really believe that we will skyrocket again. We have no reason to do so. We are just kind of steered by the American markets And exactly that is what we are looking for. If we just move into direction to the NASDAQ 100 right now, you see the record high 7516. You see the last low 7156.91, and that's the reason you just if you just widen that picture here, those candles might look ugly right now, but they are maybe more visible for you right now. And if you see a couple of projections to the upside, still to the upside, you see 138.2, sorry, and the 161.8 here as well to the upside. Downside levels first to be touched is 61.8 level again. We're moving that one here down to the downside here just to market 7380s, and especially if there turns out to be something like going more volume and with velocity going down to the last 7280s, 7260s, and 7200 markers down here to the 23.6 level. That might be an interesting level where the market is maybe scratching or trying to get to if we are really going down there. Have a look at a couple of single stocks right now. This is most interesting single stock right now at the NASDAQ, I guess. Not hide all, it's show all. And you will be finding that one here at the American stocks right here, TSLA, so the shortening for Tesla. One thing for sure, if you're trying to prepare stuff like that, you might be aware that the market is still closed, so you can't trade it right now. But we are not trading it right now, and we are not even preparing a pending order. We're just looking for, let's say, some kind of interesting setups or interesting markers where this market might turn around or might be heading to. So if you look at the last low here and at this record high here, not record high, at this high here, you might see a couple of ways where you could trade that one. You still have two gaps to be closed, possibly, just possibly. First of all, there's one gap here. And just drawing it, it's not 100% correct, just to make it visible. And another huge gap. This was the gap where they spoke about that kind of, let's say, no, that was the gap where what happened when Tesla record numbers, when Tesla quarterly results came out, and the last move up here was the discussion when Musk spoke about that possibly taking the company private. So this is a lot of stories are going around. Is this already a Tesla top? Is this something like a signal that this kind of stock is going to be ended in the bull run? So all you got to do is something like comfortable right now because it went down a little bit, and you might have the gap and you might have the last high. For something like a stop loss level for those going to be short right here. So what you can do is, of course, speculating to the downside, and to the direction of the 61.8 level. The 61.8 level is the level of sub 300, so 279ers. And that might be just the reason because of this huge gap here, and this gap. It's something like a gap close trade or a gap trade to be closed. This is the only reason you might think about going short here. Looking at the current fundamentals of the company, you might really ask yourself what will happen when Tesla is really going to be taken private, because all you got to see around the world, everywhere you hear the name of Tesla, you mostly think about the stock. Of course, a couple of you guys might think about the cars as well, but a lot of guys are thinking about the stock, and that's the reason it's a huge kind of tool for Tesla to be market aware, because all the market guys and all the stock guys and the traders all over the world are looking at the Tesla stock, and they're even more looking at the Tesla stock than at the cars. So if they just take that private, I'm really asking myself why you should be. Yeah, it could be something like negative marketing strategy for them. But that's not my problem, that's not our problem. That's a problem of Tesla, of course. And we are just thinking about trying to do this trade to the downside here. Be aware that this is a bumpy road, a really bumpy road, and it's a really dangerous stock to trade it short. A lot of shorties have been grilled in this direction here, around here. And Tesla published really bad numbers. And they're still burning massively. They're burning money massively, and they're not earning enough to, just to convince something like, like a solid investor, a really 100% solid investor to the next future, that this company really is about to earn a shitload of money in the next years to come. You will never know, but from this point right here, I'm really asking myself what should happen and what has to be happening that Tesla is earning massively. Okay, so this kind of a trade scenario is just something to be said, and of course, just don't try to do it before the markets open because it makes no sense. Let's check out the other one. There was one currency pair besides the euro-US dollar right now, which is kind of stabilizing right now. You have got to watch at the euro-Swiss franc again. We spoke about that currency pair a couple of times here, and right now, if you have a look at the daily chart, just widening that one here, you will see that the euro-Swiss franc pair is heading to this old low, which is at 113.66. That is just the reason that you have a look at those two levels and try to doing something like a little bit of a slow trade or a little trade. So that means no huge position size, nothing like a major risk or a really high risk. Just try to play it with a little position, if you like to play it, because Euro CFF, so the Swiss franc is really something like a beast. It can be a beast. You might remember all those times when the Euro Swiss franc really crashed and then crashed sub the one marker, sub the parity. Those days when the Swiss National Bank got rid of this so-called peg and peg of 120. But right now, this is something like a possible scenario that we might get some relief and going to be getting up to the road again. So first target here at this currency pair here could be this 61.8 level or nearly scratching this level. So approximately 115, as you can see. The stop loss levels of that kind of a pair, I really have to say that guys playing this kind of a currency pair need, first of all, they need strong nerves and possibly need a huge stop loss. If you look at, for example, investment banks, when they are sending out some kind of signals or some kind of trade recommendations to their clients, they not only they don't send out stuff like, oh, you're going to be Euro Swiss long at 114.20 and the stop loss is 113.90. So that's ridiculous. They're not even thinking about a stop loss of 30 pips. That's just crazy, because they know you will be kicked out of the market in the sudden of a couple of minutes if something is going wrong with the market, or something like velocity and volumes going up and down like today. So if they send recommendations out there, they often have stop loss scenarios between 200 and 300 pips, or let's say cents, if you like. And that's the reason you got to play those kind of currency pairs if you like to trade it for a longer term. So I'm talking about a couple of days and 2 weeks. You need to be aware that you have stop loss levels like 100 to 150 pips. But of course, don't forget, if you trade that with a stop loss level of 100 to 150 pips, you need to have a really much higher target. In this case of a 115 target, of course, this is, let's say it directly, this might be bullshit, because the risk ratio and it's just ridiculous. You of course, you need to be targeting rates like the 117 high again, or let's say this old high here again. So you need to be coming at the market here in this direction again. So if you have stop loss levels like that. So this current trade setup is just going to be the 114 marker here in a direction to the upper band, as again stabilizing. This also has to do something with the next interest rates and differentials between the German bunds and the Swiss francs. You got to know that the Swiss National Bank still has a negative interest rate of 0.75. The euro is at 0.0, so it's at 0. So there's still something like let's say more favorable to be long the euro, just because it might be getting a little bit of a rate hike earlier than the Swiss do. That's for sure. Okay, and this is the euro-Swiss franc currency pair. I'm not sure, Tim. We are running out of time, but did I miss some special wishes, some special markets clients are asking for?
Yeah, Dirk already talked about this.
Those guys, let's have a look. Just go back in really long-term 137507, 137513 years. Okay, so right now you see we are directly at this 50% retracement of this really long-term scenario. We are right 29th of but just to be massively correct into this longer-term scenario, you see targets to the downside like this 61.8 here, which is 1173, and you see targets to the upside, which is the 38.2 level at 1250, and of course on top of that you will see indicators like the RSI on the long-term view. There you can see that the gold price, or the price of gold here, or gold, is already in oversold territory even on the weekly. If you go to the daily, if you go to the weekly, and if you go to check those levels out, where you could possibly see something like a turnaround, you are just between the 50% and the 61.8 level right now. And the one thing for sure, why is it not so favorable to be in gold for a longer time and in a long scenario? Well, have a look at the current interest rates in the US, have a look at the rates to come, possibly rate hikes to come, not even in the US, and look at some kind of rates going a little bit more up the road in a couple of countries, even in Asia, even in countries like Australia or New Zealand, where target rates will be going up the next quarters and quarters to come. So it's quite a kind of a question if it is really favorable to be in gold on the long side. The only thing is which you have to pay attention to is the real interest rate. So the real interest rate is not the interest rate you see that at the Eurozone, or you see that one at the US. The real interest rate is the so-called difference between the actual target rate, the actual interest rate, and the inflation. And if you see something like negative, you still ask yourself, this could be really something like positive for gold. So if you go and check that out in the most important countries like US, like even China, like UK, like the Eurozone and others, you will need to check out if there are real interest rates sub-zero, or if there are real interest rates right now a little bit above the 0 point. If you find out that stuff, you will be seeing at the major or at the average that it's not likely to be favorable to be a bull at the gold scenario in the next quarters to come. The only reason you could do so is when some kind of targets from the U.S. Federal Reserve are going to be lowered, and if banks like the ECB or like other major central banks are talking about lowering their kind of forecasting, so that could be positive for gold. The only thing which is positive for gold right now is the CFTC data, or let's say the data from money managers. If you see that those guys rapidly going out of longs, the contraindicator, and some kind of indicator for the next short squeeze to come. We'll be waiting for this kind of short squeeze a couple of weeks right now. But if you see at the weekly RSI right now, it might be coming more sooner than later. So that's the only thing I can say. Nothing like Merlin's glass ball here. Nothing like gold is going to be skyrocketing, if I say that one, or going to fall off a cliff. All we can do is just analyzing. All we can do is just try to get all those fundamentals and technical stuff together and have a look at the sentiment, like the CFTC COT Commitment of Traders report. All right. Yeah, Tim, it's overdone. 11:34.
Yeah, you're right, Dirk. We are a bit over time, but it's like always here in our webinars because, yeah, we have so much to talk, so much question from our listeners. So, yeah, but for the moment, I think we are very done. So, thanks, Dirk, for you showing us here what's going on the markets and discussing the political issues for the moment. Yeah, for sure. Thanks for all our listeners here today. We are back on Monday at the same time. Here, if you like, you are always invited here, and feel free to join us. So I wish you a good weekend, good trades if you trade today, and yeah, hopefully we see us very soon. I give back to you, Dirk, for some last words from you, if you like.
Yeah, especially having a look at the week to come. If you see stuff like central bank data or the economic calendar side, for example, is kind of interesting. ZEW is coming up next week. GDP numbers for the Eurozone and Germany are coming up, and a couple of, let's say, middle to lower sized economic importance are coming up as well. A couple of DAX companies reporting. 3 or 4, I guess, and then we are really pretty much at the end of the earnings season. We are going to be closing that kind of earnings season stuff in the next days to come. So the most important companies already published their numbers. So we might be falling into a little bit of, let's say, like a hole from the informational side. So be aware that's going to be a bumpy road next week. If you have a couple of trades, like I showed you this one at the German DAX, and have a look at the Nasdaq as well. Most importantly, have a really relaxing, nice weekend. And if you like to, you will find that webinar at the YouTube channel. And we'll be finding us again at Friday 11 CT right here next week on Friday. Thanks a lot. Have a good weekend. Bye-bye.